Ed Moya, Chief Market Strategist at Oanda, O-A-N-D-A. Good to have you on the program, sir. So is this really the real deal now? Are we going to get the IPO, Ed? Because we've heard a lot about it before, and it never really came to fruition.
Very much so. It looks like they're all in. They're going to have the institutional book building take place over the coming weeks, and the prospectus is out, and everyone's digesting it, and I think it brought out a lot of red flags.
Now, is the price of oil going to be a problem, or is their IPO basically a signal that the Saudis feel comfortable that the oil market's not going to fall apart anytime soon, right? I mean, we saw the 15-16 route obviously played a role in the delay of the IPO. So this time around, should we be reading into this a little bit?
I think so. I think you're going to see the Saudis do everything they can to keep prices stable and for them, hopefully higher. And we have all of this IPO right around a critical OPEC meeting. So I think you're going to probably see the Saudis deliver whatever it takes to make sure that these production cuts are extended by the OPEC Plus group.
Okay, now the cuts and then the supply. So we've got the obviously the U.S. part of this on the supply side has been a real big deal, Ed. But lately, I've seen a lot of articles, seen a lot of research showing some of the weaker shale plays are coming under a good bit of pressure, even with oil well above what many thought the break-even prices were. What's going on? Should we expect rigs to start shutting down? Is it that bad?
I think you're going to probably start to see the velocity of U.S. production slow down. But in the short term, I think we're going to see oil be fairly supported here. I think when you take a look at some of the geopolitical risks, that's going to provide some underlying support. And more importantly, though, the global demand story, we might be seeing a bottom here with a lot of the data in Europe. We're also probably going to see more fiscal stimulus, and as we see in the U.S., the Federal Reserve's policy has been accommodative, and we're probably going to continue to see further efforts. So I think you're going to have a raft of stimulus, which is going to help alleviate the global demand fears that we've had for the past year or two. And more importantly, you're going to probably start to see the supply side start to provide a little bit of support here for oil.
So Ed, crude, to your point, I mean, is basically vacillated for now like 6 months almost, gone a whole lot of nowhere. Even despite the oil field strike, that rally in crude faded. Stock market has been reading through something on trade and global demand in some respect. People are buying industrials, they're buying some of the companies tied to the global economy, but not crude. So is that disconnect still tied to the supply side? Because it does seem like there's signs that maybe that supply side pressure on crude might be abating, to your point.
I think so. And when we take a look at the expectations going into this OPEC meeting, you're going to see the discussions for possibly even deeper cuts. But more importantly, for the overall supply side, I think you're going to see an extension. I don't think we'll see a deeper round of cuts, but I think you're going to probably also see the velocity of the U.S. production start to slow down a little bit in 2020. And when we take a look at just where we've come from, there's still a tremendous amount of geopolitical risks in the Middle East. And I think also when we take a look at some of the production that we're seeing in Latin America, you're going to probably start to see a stronger case for higher oil prices starting next year.
I like this point because on the one side, as you put it, Ed, the slowing rate of production possibly from the shale still being a positive number in terms of supply, just kind of slowing the rate at which it comes online. Am I understanding you right?
Exactly. I mean, the U.S. is they're going to deliver over 13 million barrels per day, probably maybe closer to 13.5. But it's that velocity, the markets where everyone knows that the U.S. is going to be the dominant player in energy, and they're going to most likely be a net exporter for the majority of 2020. And I think, though, it's that pace. It's that pace that the market wasn't pricing in. So you're going to probably start to see that provide a little bit of bid for oil.
You mentioned Latin America as well. I think it's probably worth a mention here, too, as we have focused so much on the U.S. and then the Saudi side as well. What about South America and the general geopolitical angst that's still there? I mean, a power vacuum basically after Evo Morales is gone in Bolivia. What about the overall political tension in South America? Is this now a potential supplies, negative, or how is this going to play into the entire space?
It's interesting that you brought up Bolivia because I think everyone is now focusing on Venezuela because now they're going to see, is this going to be where we start to see major changes in Venezuela's leadership, and we're probably going to start to see more uprisings, more protests, and I think that as the Latin America situation develops, this is going to just probably be another bullish catalyst for oil prices, as this uncertainty is going to likely see disruptions and possibly, in the longer run, see more leadership changes on these socialist governments.
Yeah. All right. Maybe help and put a little bit of a bit into it today. Oil at $57, down 56 earlier. Ed Moya, really good stuff here. Definitely a helpful look in a very complex market right now. Next step, Saudi Aramco IPO. Ed Moya is the chief market strategist at Oanda.